How you doing?
Hey, Eric,
Good to see you.
good seeing you too.
How's everything been with you?
Oh, it's been great. It's,
Yeah.
I mean, I've been having $1,000 days consecutively. Just crossing my fingers, getting a little bit lucky, I think, too. So, we'll see.
Yeah. I mean, after some time we'll revisit, but I mean, that's great to hear that, you've applied things that we've been talking about and, you've found some success there.
Yeah.
That's awesome to hear. All right, we'll give some other people some more time to join in, but if you want to tell me or, get me some extra tickers that you might want me to look at. I've got SPY, I've got Alibaba, I'm going to go over AMC and GME just because they're very popular at this point. I'm going to go over Tesla, and then we could look at some of the popular ones in the group like QuantumScape and those. Let's take a peek at those. But if you have anything else that you want, throw it into the chat so I don't overlook it. I will take a note on the side over here as well.
Okay.
But yeah, I've got some interesting things to show you guys. I've been you can see my chart's got a whole lot of stuff going on it, but it'll all make sense in a little bit. Obviously, I like to be very visual with what I'm trying to give you guys. But there is some stuff that I've been looking at that I think some patterns are starting to show, and certain potential accumulation, potential distribution setups that we might be able to look at as well. So we'll see. Let me. Okay. All right. So the first thing here you might think is, it looks kind of ugly, but let's do this real quick. We'll take what's in the back. We're going to hide him for a second. All I want to show you first is, yeah, there's the resistance lines up and down, but the red and the white, what those are you're going to have your Fed meetings on the red, and then they have their notes that are released where the white is. Do you see that? So, your December 15th and January 5th are linked. All right. That's when they're saying, hey, we're going to start having we're going to aim for a soft landing, right? And we had this whole, they call this the Santa rally. Okay. What you notice with the Santa rally in this situation is, Christmas, with a lot of people spending money. There's a lot of push to go buy stocks and things like that. But what you'll notice here is there's actually a very low amount of volume. It dipped like crazy, even though it's making higher highs. Okay. From there, what was actually then in the minutes as well, we started to hear that, hey, they're really going to start raising interest rates. This whole thing with the, this landing that we're supposed to have, that's supposed to be soft. They start talking about it, but they pretty much started to say, okay, we're going to stop with the we're not going to be buying back as many treasuries and things like that. We're going to start taking care of our balance sheet because we've ultimately overspent, in a sense. We've put too much money into our economy, and we need to start taking out that liquidity. And so that's where that started. And you see big money started to take that out. All right. We've had a lot. So what I did as well on here, you'll notice, is there's all the fear and greed readings as well, 30, 66, 59, etc. And then obviously I had this fib channel. You guys might have been seeing this, that I have been posting in a couple of our channels, in either my ERoo trades or in the ICA graduates as well. And here's kind of the pattern that I noticed. This little, let's not copy this down just yet. Let's have you guys take a look at it here. So this green pattern right here, let me redraw him, because it's actually, there are some, it is considered one of those harmonic patterns I'll show in a second. But pretty much what we had was, we had this little boost, right? We had this last little boost to the top, and we had this significant drop, okay? And from there, we have this retest. We have this double top right here. I'm going to point that out. This double top that retests the middle zone of this, in which we actually make new lows from, okay? And you have this little W shape with actually double bottom here. Before we had this, remember that Apple rally when Apple made 11 days in a row? I keep talking about that, right? That was the first, think of it as the first little bit of a shorts getting out down here because, hey, they had been getting pretty low. They might have reshorted up here at the 23 and then taken more profits down here before more people started to cover, okay? Remember though, during this rally, there was a lot of talk about how this was gonna be a new high, okay? How we were actually supposed to, from this situation, continue further and breaking above this. That was what was expected there, okay? So think about the language of the media, what they're trying to get people to, they're getting people to act as supply and demand, all right? So with that being said, this pattern, then we have this big giant drop. Let's just draw him out too. Big giant drop. Okay. So from that drop on, what I want to point out is that, we'll go to the first part of the drop right here. What I started to notice though, is if you take this fractal that we've already had, it's acting out a little faster than before. So you have this first green here. It dipped a little bit lower, but it really did respect that pretty much when you look at the bodies of those. Okay, so it dipped a little bit lower. Remember what I said, double top? This was just, this created, we stalled out for a while up here, keep in mind. But that's supposed to be similar to this right here, right? We stalled up, we made a double top here, but you can imagine here we had less momentum. We didn't peak up above. That's kind of just the thing. We didn't peak up above it. Another thing about it as well is when you look at the fear and greed readings, they start to look fairly similar in terms of like gaps between each other. Yes, here down, we're here down at a 7. We weren't nearly that low up here. We were still fairly, fairly greedy up here. Here we have definitely some extreme fear, right? So extreme fear. We dipped even lower. So watch this. So obviously, I was saying this moved a little faster. So our low is over here. And then we have another test right there, just like this right here, 23. Our fear is at like a 24, 27 was recent, 30 was, 30 was when we're near the top. So we're very close to the fear readings of right here as well, okay? Now, did anybody also notice how Apple's getting a lot of call flow for what's upcoming? So what I noticed was, especially today, I just have this pulled up right here. Apple got a lot of this call flow for like October, right? 165, which is a pretty high up over here. Yeah, they're pretty cheap, out of the money. Scores are kind of low, but this first one put it under big money, okay? 2.7 mil that was taken out for a couple months out from now, okay? So could it be, and I'll use Apple as well to add on onto it, we could see another quick little rally as well. I'm just gonna put this here, that Apple could come back up to retest that supply of all these people down up here. We could break higher, but as of right now, just due to the way that, things have to change with, the CPI readings, the economy. Right now, it's still showing this, inflation's still pretty hot. So there is a chance that the Fed, we're saying 75. What if they start talking about 100? There's going to bring more fear into the markets that could potentially bring it down. But in a lot of cases, when that first happens, we see the opposite reaction sometimes. We try to get a fake out, big money tries to fake people out. So what I want to point out there is that you might have a rally, and that rally, okay, keep in mind that this doesn't have to come nearly as far down. We could essentially have start the rally sooner than anything, okay? So that's one possibility if you think about it, right? We don't have to take as extensive of a drop over here, but if we do have Apple getting all this attention, maybe we could have another solid rally just like this right here. Highlight him right here and have that continue up toward the upper bounds of this channel. But that doesn't even, that doesn't mean we're in the clear either, because we're still in this extreme downward downward movement, we haven't broken this resistance anyway. Okay. So until that resistance is broken, you wouldn't necessarily be bullish anyway, right? But let's see real quick. If I were to move this back down, if we were to continue playing out a more similar portion of this fractal as well, right? Today's action was kind of interesting. We gapped down lower, went lower, came back up and opened up higher. But if you were to consider, you know, strat wise, this is still a 2 down. We've had a 2 down, 2 down, 2 down, 2 down, right? That makes sense. So we're continuously going in a bearish momentum on the daily as well. So there's, you know, even though today was a green candle, meaning we opened lower and then closed up higher, the price action for today was all lower than yesterday and all lower than the day before. Okay. Now, let's also really quickly look at our volume, what our volume tells us about this. More recently, I've been really trying to focus more as to moments in which we have very low volume. So this is very low volume, right? People are not trying to purchase when you see these gaps in here, right? Low volume. What does that usually mean? Exhaustion of that specific side, okay? And so, right, careful there with this red. Yeah, it's pushing down, but it's showing that there are no buyers or sellers up in this price range. Keep that in mind, okay? It's not to say that the bears are losing out specifically here. We have to be careful about the context that we're in that volume and in that candle that we have. And so, yeah.
So when you have low volume, is that the inverse of the current trend?
The way I've always looked at it is that the price in that specific area, that candle that you're looking at, which that volume is representing, people have stopped buying there, right? And so very likely that is the top or the bottom in which it will reverse to some extent, at least for, like, for example, here, at least for a day or two, like this one as well. You only got a day of a reversal for the green, if you notice, right? The green wasn't so extreme that it broke up above and it created new resistances for either. So it continued trading within that channel. But that was still very low volume, especially comparatively. Like, look at that, comparatively to everything else happening before that. You see that? So it's just saying that, you know what, we're up here and we're showing that there's fewer and fewer people that will respect, that want to come to the market right now. If people don't want to come to the market, the price is going to go and move away from these prices, right? And here it's showing that there's a lot of buyers and sellers that aren't actually able to push it up above this level. It went up and just stayed down below. Does that make sense? Okay, so let's continue here. So right now with this, you know, there is this potential, we talked about this here with that top, we could come down and have, what I'm thinking is, let's use this drawing here. We'll have so the candle that we have today, I'm expecting us to stay somewhere with, you know, we really have to see which way we break up. But even if we do break up in any sense, we still have two very significant resistances here, right? So let me zoom in really close so that you guys can see better. I'll do this here. So the candle that I'm thinking, especially, I mean, I'm still a bit bearish on the markets themselves. If we closed over here, you know, we could open up or below, but I expect something, you know, first we're going to have some sort of inside candle and we're going to watch if it breaks below or above. But even if we do break above, this part right here, this is going to act as our resistance now, right? We have this as well. We haven't been able to break up above this here. Okay, so for SPY to move up, we have quite a few areas of resistance that act, you know, are going to act upon it at this point. And we are showing that lower, you know, low prices up here, right? Prices down here aren't all being favored as well. So we're kind of bouncing around in this channel till we find a direction. We did expand a little bit lower just now too. But if you notice, these wicks down here show that there's a bunch of buyers and sellers that are sitting right here too. So getting down to this is going to be a bit tough for bears right now. because there's so many people sitting at this point, okay? And I was actually telling that to the most recent class. Let me pull in my colors here. I was looking at this too. So let's pull in something. Let's go into the 1 hour chart. I'm gonna hide the fib behind it so that it's not as ugly. We almost got to it. So look at the green arrows that I plotted. Oh, there we go. The green arrows that I plotted on the bottom. We've got some good support right here. All these big giant green candles. Every time we come down right over here, we've been bouncing off pretty hard. So if we come back down here, right now the first move is probably something like this. Okay. We'll see what ends up happening, what volume tells us from there. But as of right now, we have so much support right at that line. Okay, so that's actually also, if we are going to go below and bounce back and retest, that's probably just going to be the area right here. We've got so many giant big green candles pushing up away from that line. So keep an eye on that. Okay, the moment we come back down to test that, and here's the thing. If this was already the retest and people aren't willing to let it come back further down, let's take a quick look at our VPBR. We've got a fair amount of people right here. You see? So this is going to be some key support right now that you can think there's going to be people purchasing to push it away from this level. Okay. So we're still stuck in between these two right now. Bias is a little bit more bearish right now. Okay. But let's jump into that next step. Let's take a look at PCC. Right. What's everybody doing? Or is everybody bearish? Is everybody bullish? What does that say right now? Puts over calls. So we're just a tiny bit more bearish right now. Every time we go bearish, notice we start going bullish again down here, right? So we've been rejecting that quite a bit. Now, one other thing to think about. So right now, just consider it's pretty even. There's no real true extreme bias. 1.04, 1.06, that's not terrible, okay? Let's look into our volatility. What does the VIX have to say about right now? How fearful are people? Remember, markets going up or down. I gotta move these over. So, if we go and VIX spikes, the markets are going down. Otherwise, markets are going to go up. Let's see our VIX right now. Overall, the trend is headed down. We haven't necessarily broken that, but in most recent moments, we are kind of making higher lows. So that's something to keep an eye out here, that we did recently just start a little bit of an upward trend. But if this is just a really ugly bear flag and we're headed down, then yeah, if we get a further movement back down here toward this, then the markets are probably going to rally quite a bit if you think about that, right? But if we end up suddenly having a spike, the markets get spooked. And here's what could spook the markets at this point. Right, the Fed has that control, right? The Fed can suddenly say something about 100, okay, 100 basis points, and we can suddenly see this spike back up. I would say at least to 30. The first resistance line is up here. Okay, maybe a little relief, higher, and then higher. That's worst case in this situation, right? So we'll have to see, because the readings, now keep in mind too, number one, I want to point out the release of yesterday, there was an early release from that the CPI reports was supposed to be at like a 10 point something, right? And that spooked the markets and it caused a quick dump yesterday. But that was found to be false news. It was actually fake news. So that got pointed out, and then the White House suddenly said yesterday that it's expected that CPI inflation is supposed to be high. It's supposed to be high or expected to be high. And then so this morning when it did come out, right, everybody was expecting the high 8s. 8.8 was kind of the consensus, 8.7, 8.6 kind of. But most of the big banks were saying 8.8. Then what came out actually was a 9.1, at this morning. And so what ended up happening was that it gapped down suddenly. But here's the thing is there's a lot of conflicting indicators of how the economy truly is doing, right? There's some things that are relieving themselves, and there's some things that are actually getting really, really bad, okay? What are some things that we know that are like, you know, relieving themselves, that aren't hurting as much anymore? Right, oil kind of took a breath back down, right? Oil was well over 100 for the longest time over the last couple, right? And it's this last week where we're starting to find this lower movement down below. Oh, hey, I had this charted. What did my prediction down here say? Okay, so maybe not, right? Maybe still early, but yeah, bounce back up, retested a little bit. You know, if we do come straight back down and retest this lower trend line before we head back down, oil started to relieve itself, right? So keep in mind that when oil spiked, the markets got spooked, the markets went down. Now that oil's coming down, the markets are having a little bit less pressure upon them as well, okay? But what else is going on? It's very interesting what's going on with our currencies right now, guys. The fear was the fact that the US was printing at such a rate, okay? What's also happening though is that the rest of the world was printing just as much too. And what ended up happening now is the fact that the other country, you know, the other currencies were not actually able, you know, their economy, et cetera, the way that their system works, aren't able to actually support, you know, or be as stable as the US dollar at the end of the day, because the US dollar has a lot of other situations, you know, being pegged to oil and stuff like that, or we'll see how that continues, but et cetera, all that stuff ends up influencing the markets too. And so it's interesting, we've been expecting the dollar to crash in a sense, but also the dollar continues to rise in these situations, right? Because right now, due to the fact that it's pegged against other currencies, you have to understand that we're becoming more valuable relative to them, even though everything is taking a breath back down, everything's contracting all at the same time. You have to understand a lot of other currencies are actually technically collapsing at this point too, okay? Due to the way that they're not able to necessarily source certain resources and things like energy that are, you know, that are extremely important. It's interesting, like Russia, as much as we want to hate on Russia, they actually did what they needed to do for their country. It's kind of screwed up in a sense when you think about it, but like their currency is way more valuable now. They actually have the natural resources to support their country at this point. They've been hoarding gold. There's certain things that, you know, at the end of the day, we'll have to see how economically things play out. But if history is going to have a say in it, the one that actually, you know, has some sort of gold backing or some real assets to back things, that's what's going to win out. That's what's going to change things or keep value in senses in a way, you know? So it's always interesting. The US, you can kind of think the way we do things is a bit of an experiment. Nobody really knows how this can really end up, okay? The way that we are printing and stuff. But in terms of historically, economically, any country that ends up in the situation that starts to overprint like this, these are actually natural cycles that end up happening where, yeah, things are gonna go up in value suddenly, but then things are gonna start crashing and falling down. Now, here's an interesting one. But that might not be the right. Copper. So there's this belief and there's this, you know how we talk about how there's lagging indicators, you know, our RSI, our moving averages. We have to wait for things to happen and then they're going to tell us what's going on. The other side of things is that, you know, our certain commodities and certain, especially metals as well, are important for us to take a look at, because at the end of the day, they give us an indicator of the health of our economy, okay? In terms of engineering, in terms of making things, copper is used quite a bit, okay? It's extremely important in terms of manufacturing and making things in our economy. And so what's recently been happening, you know, I'm just gonna use this one since this copper, I've heard some people call it Dr. Copper, right? Dr. Pepper, Dr. Copper. Copper is a leading indicator showing you the health of the economy and showing whether or not people are ready to invest in the supply chain and invest in people, you know, in that process, in industry, if you might imagine, okay? So copper is extremely important to look at, and copper is one of the leading things that's showing, hey, like,
It's still like 20 months, right?
Right? Stuff's messed up right now. And this has to do with this thing called the bullwhip effect. And I know, Frank, you've recently been talking about this as well. You know, the oversupply that we're going to have at a lot of our big box retail stores, due to the fact that what end up happening is that we have this balance between supply and demand that is completely out of whack at this point, right? You got, you know, usually they're supposed to be fairly balanced, but due to the fact that, here, let me label them. So demand and supply, usually we have some sort of balance that creates price stability, right? What ended up happening with the pandemic? Pandemic suddenly took our demand and it shot it down, right? Nobody was able to go out. You can't go buy things. You don't, you know, stock up on stuff and stay at home, okay? What did that do? That shot down demand, okay? And then what did our Fed do? Our Fed is in charge of making sure that, you know, they can adjust that demand and supply curve of a sense. So what they do is they printed a bunch of money. Well, if you and I have a bunch of money in our accounts that, you know, they just handed us, we're going to go spend it, right? And what that did was that created an excess amount of demand, and now supply is struggling. That's why we had all those shortages. People weren't able to buy, you know, the groceries and things like that they needed. But also think of it this way, even Rolexes were out of stock, right? It was extremely hard to go get supply all the way from the bottom, the grocery store, all the way to the top, to the luxuries as well. Think about the supply chain with Tesla. What that did was that caused the prices to inflate because now everybody is fighting over the same thing, right? Now, as that happened, companies look at that and say, hey, you know, we got to order and get ready for all that extra demand. So what ended up happening, they end up getting ready and ordering all this extra supply for what's coming up, okay? But then now what's happening is the fact that demand has started to take its extreme downfall. Why? Because now things have inflated to the point where the poor were the first to feel it. Now things are too expensive. They can only spend money on their groceries, okay? Rent and groceries. Rent's also gone up like crazy too when you think about it, okay? Then what happens? Then the middle class, they start to feel effects. They start to tighten up a little bit, right? So that's what each one of these downward of the demand side starts to cut down, all right? Now, the biggest cut down is when the ultra rich has the biggest amount of spending power. So when they start to, you know, taper down on their purchases, then all of a sudden you have all this extra supply that's left in the supply chain. We already have all this backup right now when you think about it. You know, Walmart's starting to talk about how they have all this extra supply, you know, Target, et cetera. That was already months ago when you think about it, or at least a couple of weeks ago, right? So the idea is that we have this, if this line is equilibrium, we start like this, and this was oversupply, where are we going next, right? That makes sense. Now we're gonna have all the prices have to exhaust themselves, come back down, unless what you think about it, unless for some reason our Fed decides to bring that demand back up again. Oop, that's not what, right? That makes sense. So here's something interesting to think about. The bullish side that I would give you, in the bullish case I would give you right now, is the Fed's going to come to the rescue. The Fed's going to relax on their rates during the midterm elections and during this to help boost things politically, to make sure that they have, you know, their finger under, have the control over the political side of things. But understand that if they do that, they will lose control of inflation even worse. Our CPI ratings will be above 10% sooner or later, okay? So that's kind of the give or take is, will they play the political game, or are they going to actually try to fix what they messed up with in our economy? All right. Now, the big money side of things is a little bit conflicted, because there's a lot of these situations where I see that we're in the middle of redistribution and we haven't quite started to accumulate just yet with big money. So I do still think there's a bigger potential downward crash to come. but I don't think it'll be, it could be very short-lived is also the thought too. It could be a quick dip and drop and jump back up, just like what happened with COVID. Okay. Let me here. I need to find that picture. I'll get that a little bit later. Oh, didn't realize that. Oh, that's because I'm on my account. I'm not on Chemo's. That's my fault. At the end of the day, what I want you guys to understand here with it is that there are a lot of indicators that show, and let's go back into these other charts too. There are a lot of indicators show that we're still in the middle of redistribution. And let's go into, I'm gonna use Tesla. Tesla is kind of tough. I won't necessarily say you should bet against Tesla. Elon Musk does a great job of pumping his own stock and making sure people come to the market when he wants them to. But if I was just to ignore him and just look at the chart here, this is actually what I've been seeing. Especially because the whole situation with Twitter, I kind of want to help you guys understand is Elon Musk kind of uses the markets and the way that he treats money is kind of just a playground. All right. So if you can tweet something out and pump up Dogecoin and make a bunch of money off of that himself, he's going to do it. Okay. There's a slap on the wrist for him at the end of the day. Now, the thing with Tesla is you got to keep in mind a lot of these big moments where they shoot up oftentimes have to do with short squeezes, people getting out, because there are a lot of people betting against Tesla. Okay. If you just look at the numbers of Tesla don't freaking make sense, guys. All right. Tesla is at a forward P of like 90 something right now. Yes, they seem to be taking over in a sense. They do, they kill their earnings. They do a great job. They help, do things for the investor. They've got their profit margin. How much of the market you think they have control over, we could argue about that. But at the end of the day, all the competitors are all at full force right now and all starting to do their best to try to catch up. Okay. We'll see though, because there's a lot of bottlenecks within supply chains that will limit certain ones that haven't planned for it. Right. So we'll have to see what plays out in those situations. Now, Tesla, if I was to base it off of what's going on with Elon politically, I think he's gotten on people's bad side. And I think he's going to get a lot more backlash due to it. And this is kind of what I see is we do have this blow off top and you do have a bit of a buying climax up here, but you've failed to make higher highs and you created this downward channel. Now, if you were to argue here that ultimately you have your first preliminary supply down here technically, right? And then you have this blow off top. Well, at the end of the day, isn't that pretty much your preliminary supply like down here? And right now we're going through this last moment of supply over here. Okay. So in terms of it, these moments down, yes, you have some rallies back up, but we still haven't had the volume to continue pushing up higher. There is an argument though, that and we could see is if we do break ourselves back up into this channel, okay, so back up into this channel up here, above this red line mostly. If we break up into there with force and retest it and show that we have enough support down here, right? We've got a bunch of buyers and sellers down here now with what's going on here. There is a possibility of reaccumulation of this shooting back up, okay? That is a possibility. But with the way that it looks and the way that, here's another thing, let's do. So what I was showing the class yesterday was that we have this top and then we have this shelf down here, which you first have. So you have a top and you have your first shelf. Then you start to make a second shelf down below. So alpha trends and also my distribution graph here both give me hints that, hey, we very likely could start to see a lower trading range for Tesla. Also due to the fact that things like the PE ratio, growth is going to get money sucked out of it. You've already seen tech already get money sucked out of it. simply because of how we are pulling liquidity out of the markets, right? You know, raising these interest rates, things like that. Tech starts to struggle. The people that, you know, the big money that has to borrow money and rely on interest rates to, play the spread between that, in a sense, they're the ones that end up suffering more. And also you got to have to think about how a lot of big tech right now is going through layoffs too, right? Because they now have to find a way to maintain a lot of these margins that they have, to make investors happy, but, find and cut the bloat where they can. So, Elon's saying, if you don't want to come back to our office, I can get rid of you, right? Microsoft's going through layoffs. All the big tech companies are doing that at this point. And so I can see how that can also create this this chain reaction of a relaxation down. Here's the thing though, they do have this tendency to do great with their earnings when you think about it. And earnings, when you take a look at it, does, you got to look a little closer, does tend to have some good reactions to them. Sometimes they do go in the other way because they've been bought up to them, right? We have the earnings run up and then it dumps afterwards, because what you can think is they effectively try to price in the fact that they expect earnings to be good, right? But if we do have some crazy, hey, people are still buying the Teslas, it's doing great, I can see it breaking back up into this channel. We'll have to see if it does retest to go up or if it comes back down. And that will kind of be the indicator of what direction it should be going in, is after earnings take its effect and people start to look through those numbers to get an idea of, hey, is Tesla still expanding the way that we expect it to, or are we really starting to contract because everything in the economy is contracting? This is just going to have to follow along, right? So there's still that question of whether or not they, overall, I'd like to see Teslas all over the place and people all, and their infrastructure help take over. I think that their cars are doing a great job of, effectively helping mobilize our population. And I've also heard of a lot of great ideas of how Tesla can really make the world more accessible for us in the future. But what price does, we'll have to see, okay? This situation we also have here is kind of just a really ugly bear flag too. You just have this trading range that you're in. Yes, it's kind of getting a little higher and kind of creating this wedge, but you can just imagine the moment it breaks up or down in a certain direction, overall, it's got more of a bearish look to it. So keep that in mind, okay? And also you could even think about how, you could call it a 1-2. This could be a 3-4-5. We haven't, you could argue that we've already broken back down below it. So, the A, B, C, is that done? And you think we're headed up? That's another possibility too, okay? Hey, Kimo. I just realized I was using my account on this and I don't have it on I didn't pay for anything. So if we can log back into this, if they'll let us, otherwise we can have, I'll log into Kimo's thing and then we can create a new meeting and continue from there. But this will kick you guys out in like a minute and a half. I'll post back in the Discord thing in a moment though, but let's just continue real quick. So Apple here. Apple overall can still be bullish on the big picture. I actually noticed that this could be an accumulation, reaccumulation situation, because we do have on the left side over here, this rising situation. Okay.
Hey,
what's up?
I had a question on Apple. Are the wicks going crazy, or is it just me? It's like really long.
Yeah. It's the fact that the markets are still very indecisive. And so, yeah, the wicks on these, we've been having some extremely interesting, like, I know if you go a little bit closer as well. Right, price action overall in general, especially with CPI data being released recently too. There was just a lot of volatility just due to all the all the crazy all the question marks along the way. People are very uncertain at this point, right? If you look at the VIX, as much as the VIX has relaxed, it's still in this like mid 20s range. right? We haven't really gone back down to like 20. Okay. So, you know, 20, 25, 30, that's still a bit of indecision. Above 30 is definitely when we start to be a bit more fearful. Now, Apple in this situation, right? Yeah, it's let's look at here. Let's go into the hourly.